So what we are going to talk about today is what is important when you analyze dividend yield, okay? You probably already heard about the dividends. Dividends on the stock market are basically the amount of money that company pays you when you buy their stocks, okay? So basically, when you buy some stocks of Apple, let's say, they give you dividends back as a thank you actually, because you bought their stocks. You know what I'm saying? So they're giving you money for owning their stocks. It's that simple, okay? And if you want to become a dividend investor, just like I am, which basically means that you buy stocks with amazing dividend yields so that you can get those dividend cash flows every month inside your bank account and at some point retire with that money. If you are like that, bro, then you are probably thinking, okay, I want to become a dividend investor. I want to have monthly cash flow, but I don't quite understand what is good about the dividends. What should I take care of? Because logically, it would make sense if you are a dividend investor to buy stocks with the highest dividend yield, right? Dividend yield basically tells you how much money you get through the 1 year of dividends, okay? So if dividend yield is, let's say, 5%, and the stock costs like $100, euros, whatever, in that 1 year, you will get 5 euros. You know what I mean? Like, you just calculate how much money you get, and the higher the dividend yield is, the higher the dividends are going to be as well, okay? So many new beginner, let's say dividend investors, they are thinking that the best strategy for dividend investing is just to buy stocks with high dividend yield, because it makes sense, right? But bro, I will tell you that instead of buying the stocks with highest dividend yield, you should invest in good stocks, in amazing dividend stocks, okay, instead, because high dividend yield probably, or higher dividends, let's keep it easy, let's say higher dividends probably mean some hidden risks that you are not yet aware of, okay? And the risks with high dividends or absolutely amazing dividend yield is, there are 3 of them, okay? The first risk, bro, is that the dividends of that company are completely unsustainable. And what do I mean by that? So there are quite a lot of companies actually that pay dividends, but they cannot afford them, okay? Because whenever we analyzed stocks in the past, for example, you can take a look at my YouTube channel. I've analyzed quite a few stocks. Whenever we analyze them, bro, we are analyzing retained earnings in the balance sheet, because retained earnings actually tell us how much money company reinvests back instead of paying it as dividends, okay? So what does that mean actually if the retained earnings are in minus? That means that the company is giving more cash out rather than the cash that is coming in. And this is completely unhealthy. This is completely unsustainable on the long term. And this company has much higher chances of going broke, going completely bust. You know what I'm saying? And there are so many companies on the market that are doing that. There are so many companies with high dividend yields, with high dividends, that cannot afford them. And this is the recipe for disaster, okay? And now you are wondering, why are they offering high dividends if they cannot afford them? And the second reason, or the second risk, is connected with that. It's actually they are trying to lure new people into the company, okay? They are trying to lure new investors because they know that their company is a bit shit, they are in problem, they are in troubles, so they're trying to save it. And how can you save a company on the stock market? The only way is through additional cash, through stocks, you know? So whenever you buy a $100 stock, for example, you are giving that company additional $100, okay? Because you bought their shares, you gave them the money. It's logical, okay? So they are trying to increase the dividend yield. They are trying to pay more dividends so that they can lure new investors into the company. And that's how they can get the additional cash, okay? This is completely understandable strategy. Like, everyone would try to get extra cash when they don't have it. Unfortunately for us dividend investors, that's not an amazing strategy, because we have higher risk of losing our money, and we as dividend investors or investors overall, we don't want to lose money. We don't want to fucking lose money. So we try to avoid those companies as much as we can, because we know that there is one secret lure, there is some secret marketing behind it, to try to get our money, so unfortunately that doesn't work with us. Okay. The third reason why they offer high dividends is because the companies have limited growth. Okay. Especially, for example, if you have some startup company that's not performing well, they are thinking, okay, fuck it, we will have higher chance of losing the money, we will have higher chance of not performing well, we will have higher chance of not growing, so we will offer dividends instead. And that's kinda okay, like when you have 100 years old company, of course they cannot grow, okay? So they are giving dividends instead. But the problem is that there are so many small companies that offer high dividends instead of growth, but that's not true, bro. That's not good, because if you are a small company, your priority should be to grow. Your priority should be to grow first, and then when you get the name, when you get the reputation, then you start to offer dividends. That's logical approach. From my perspective, I would do that, bro. For example, with my YouTube channel right now, I'm not selling you anything. I'm not saying, yeah, click the link below, because I'm growing, you don't trust me because I'm someone new. So it's the same with companies, it's the same with companies. They are new, and then they are thinking, okay, we have to give the good name, and they offer dividends instead of growth. And this is also completely unsustainable on the long term. So let's see what will happen. Okay. And now that we covered the risks, I cannot stress that enough, bro. Even if there are some risks, even if the companies that you're investing in might not perform well, it all depends on your behavior. Okay. Your behavior is crucial here, bro. I made a specific video about that. So take a look at here, bro, if you want. And if you want to learn something new about the stock market, if you want to learn something new about self-improvement as well, I'm trying to combine both concepts together. If you want to learn something new, bro, click subscribe, join me on my journey with self-improvement, with stock market investing. Let's grow together. Let's strive together. Let's just be better, man, all together. Okay. Do the hard work and see you on top of the world.